Hey guys, what's going on? It's Lewis here with Crypto Elite. Today's date is November 29th. I hope you had a wonderful Thanksgiving and holidays wherever you may be. There has been a lot of stuff that has gone on, and I really haven't made too many videos. I made that one really long video on FTX that you could watch, which is, on my channel right before this one. And before that, my last video was about 2 weeks ago. So today I want to go over a couple things, and I want to go over some updates. I want to go over the market, and I want to go over the plans that I have for the future when it comes to Crypto Elite, when it comes to a hedge fund that I am starting, when it comes to my overall strategy, just a whole bunch of content, and really just a whole bunch of stuff to keep you filled in on what's going on. I think the first thing that I want to say is that we're all going through it right now. We've all suffered a lot this year. But I posted this tweet, and now is the time, okay? Now is the time to finish the year strong and to start preparing for 2023. What's in the past is behind us. We can't change it. So let's move forward. Let's prepare for 2023 so we can make 2023 the best year yet, okay? What are your big goals? What are your big goals for the next 5 to 10 years? And what are you going to do in 2023 so that you move towards them and you accomplish them? Those are the type of questions that you should be asking yourself right now. Okay. I know that a lot of people get into crypto because they think it's a get rich quick scheme. It's not. It is. It is if you're a trader, if you know how to trade it, and you get in and you get out and you're unemotional with it and you don't get so greedy and you follow your game plan, you could make money. And you could still make money in these markets right now. You could make money, okay? So the important thing is to not beat yourself up too much about it. I definitely beat myself up a lot for some of the mistakes that I made. I sold the top back in November, which was absolutely amazing. And I put some money towards real estate, which is awesome. But I ended up buying back in at 60, 70% down. I was like, okay, we have to have a dead cat bounce. We have to have a bear market rally, because there are bear market rallies, or there have been bear market rallies in every single big downturn, every single bear market, pretty much ever. And we didn't really get one. We didn't really get one like how we got one in 2018. And we didn't really get one how even in the stock market would get a lot of bear market rallies. And we really essentially just dropped from 55,000 all the way down to 17,000 Bitcoin. So no bear market rallies. That sucked. So I did end up taking quite a big hit. Thank God. I'm so lucky that I got all of my funds and everyone else's funds off of FTX, off of BlockFi, off of Celsius, and all these other accounts. Really sorry if you had money on any of these things, but I do, I do like to say a good way to mitigate your risk, your counterparty risk, is to have money on multiple exchanges. So I have money on all of the different exchanges, a lot of different exchanges. In case one of them goes bust, then I won't take a huge hit. And on that topic, I want to go into another tweet, which is basically, in the past couple of months, I have had thoughts that this past cycle was really going to be the last opportunity, or was really the last opportunity to quote unquote make it. But I was thinking about it logically today, just an hour ago or so. And really, that's a ridiculous statement. That is an absolute ridiculous statement. Look at stocks. It was any time ever the last time to quote unquote make it in stocks? No. Like, let's say you got in 1999, 2000, you rode the internet bubble up, and then it crashed and you lost everything. A lot of people did that, right? Was that the last time to make it in stocks? Obviously not. I mean, damn, even if you got in 2008, 2009, when the big global recession happened, everything went down. But a few years later, things went up like drastically. And same thing with 2008 with the housing crisis, obviously. If you were in real estate, a lot of people were in real estate. They got wiped out in 2008, 2009. Was that the last time to make it in real estate? Obviously not. Of course not. So don't think that this was the last opportunity and you missed your opportunity and you missed the boat. I mean, look at this. Fidelity right here, one of the biggest banks and biggest managers of money in the entire world, okay? crypto is coming. Crypto isn't here. They're saying crypto is coming. They have not even started their crypto journey yet. The biggest bank in the world, okay? One of them. So if these huge institutions, they haven't even gotten into crypto, okay? It's going to be here. Okay, it's going to be here, and we're going to have plenty of opportunities. So it's really about just sticking with it, doing what you can to make money, and to just make sure that you're good during any really, really bad times. Because if you weather the storm, that is when the opportunities arise. And then one more thing I want to say before I get into the market update, which is that it's Black Friday and Cyber Monday right now. So there are a lot of really, really good deals going on. And I think that if you are a serious trader, or if you want to learn how to trade, or if you want to take in trading and investing in your journey, that there are a few things definitely worth getting that are drastically discounted right now. And so number one is TradingView. TradingView is the charting software that pretty much everyone uses. TradingView, it's really, really good. And they're having their Cyber Monday sale 60% off and a free month. This is absolutely phenomenal. $288. I paid $500 for my premium subscription. And so 288 is an extremely, extremely good deal. Along with that, we have 3Commas. This is also 60% off Black Friday, Cyber Monday. It's really, really good. My favorite software ever. So highly, highly recommend 3Commas. And if you have been following me for a while, you know that I have my own personal trading and investing course called the Crypto Elite Crypto Mastery Course. If you go to cryptoelite.com, it is currently 80% off. I have never, ever done this. This is sort of ridiculous, but it is currently $197. And that is the lowest price that it will ever be. Literally, once the sale is over, it will never be under a certain price again. And in a few months, the Crypto Mastery Course version 2 is going to be $1,000. It's going to be $997. So the fact that you could get this version, which is very, very similar, for $197 is phenomenal. And if you get this one, you'll get a big discount on the second one when it comes out. And so if you were looking to trade and you want to know the techniques that I used to sell the top back in November, then this is the course for you. And I will have a discount on the VIP membership coming up very soon. I'm still working on that, trying to figure out exactly what I want, but I'll work on that today and hopefully have that out for you tomorrow or the next day. So if you were looking to get a membership to the VIP Discord, then you'll be able to do that. And so all of that covers the majority of the update that I wanted to make. The last thing that I want to say before we go into the charts is that I'm actually going to start a hedge fund in 2023. So if you were looking to invest in me and have me trade for you, stuff like that, then I am going to be opening up a hedge fund, and I will have a lot more info on that coming up in the following weeks. I'm currently deep diving into all of the requirements, and I'm learning all about the space. I've been learning about it for months now, but I'm really doing like 4 to 8 hours a day, learning all about hedge funds so that I could do it properly. And so I will keep you updated on that, and that will be a great opportunity to help diversify. And maybe if you don't want to trade in and out all the time, then you could put it into my hedge fund when it becomes available, and I could just do everything for you for a small fee. And so if you are interested in joining the hedge fund and investing into a hedge fund, then email admin@cryptoelite.com with the subject of your email hedge fund. And in the email, just give a little background about who you are, why you would possibly invest, how much money you have, like your net worth, and how much money you think that you would want to invest, and if you are or are not, or if you know or if you don't know, if you are an accredited investor. And so just send me an email, I'll check it, and I'll give you preferential treatment whenever I start my fund in the following few months. And so now that we have all of that out of the way, let's go on to the market update and talk about Bitcoin and Ethereum. Okay, so now let's go into the charts. We're going to look at the total market cap, then we're going to go into the dominance levels, followed by Bitcoin and then Ethereum. So looking at the total market cap, you could see that we went from $3 trillion all the way down to currently under $1 trillion. So the total market cap for all of cryptocurrency has lost over $2 trillion. That is pretty devastating, to be honest. And we still have not reached the basically, well, okay, I was going to say we haven't reached this right here, this zone right here, which is the down move before the move up, which means that this is the order block. But we still, or we have finally reached the total market cap previous high from January 2018. And so we did reach that, which is good, and we bounced off of it. Because this is the area where I was thinking like, okay, I'm going to go in very, very heavy from this area a long time ago, like way back over here in like April of 22. But we never actually touched it. See, this right here, this candle never actually touched the previous high. But this month we did touch it. So that might be a good thing in terms of like potentially having a bottom, but obviously we'll have to wait and see. The next big area would be this big area, which is the 88% retracement. So if you take the 100% from this previous low right here to the top up, where is it? Up here. And then you go 88% down. That is usually where institutions tend to buy. So right here is $626 billion of the total market cap. This is a potential bottom. I would think that this is where the bottom would be, because seeing a total market cap of cryptocurrency fall even, much further than that, that would be pretty ridiculous to have the total cryptocurrency market cap be under what it was back in 2017, 2018, because there's so much more money in the crypto right now. Like I really wouldn't expect the total cryptocurrency market cap to come down below $630 billion. I mean, yeah, unless someone is taking money out, like the government or some entity or some bigger thing is taking money out to manipulate the markets in some type of way. Yeah, I think that this would be the bottom for the total market cap, just because we have Fidelity going into it. We have so many big players going into it. So that's total. Let's look at the weekly, just like see what's going on here on the weekly chart. So this right here, this is that big, the 2020-21 top. And like, this is what I was talking about back here in June. I was really going to go all in right here, but it missed it by like just a couple percentage, if that, 1 or 2%, before making that huge run up. So I'm sure a lot of other people must have had the same thought of like, hey, I'm going to go in when the total market cap reaches the 2018 highs. And ended up missing a lot of this, but did end up going in somewhere around here because of the Ethereum merge. I knew that was going to be a play and run the price up. But still, now that we have reached this level, I mean, this is an area of interest when it comes to the total market cap, right? So this whole area is an area of interest. So what you do is you look for areas of interest, then you plot them out, and then you go into the smaller time frames, the lower time frames, and you say, hey, this is an area of interest. So I'm going to look for entries in this area of interest, and I'm going to get in to the market and have a stop loss in place based off of where I'm going to enter and where I think the market is going to go. So bullish. So this makes me a little bit more bullish unless we fall back below here. Yeah, so this is what I'm going to say. Let me do this. Yeah, so this is what I'm going to say. I'm going to say if we fall back below here, like we should be on a bullish trajectory right now. This is a bullish, this to me, this chart looks bullish. So we fell, we created the low, we jumped up, we came back down, we stopped everyone out. So this was a liquidity hunt. This was a sweep right here of this low, right? So there's a lot of people that got in right here, and then they wrote it up and they wrote it all the way back down, and then they got stopped out because they put their stops right below it, right? So we stopped those out, and now we're on our way back up. And typically this type of right, down, up, right typically results in an upward movement after that. So I'm leaning bullish right now. I'm leaning bullish. But if we do fall back down and we fall back down underneath here, then this is where I wouldn't be very bullish at all, and I would probably just target $640 billion and then want to go into the market at that price, or at that level when there's that much money in the market. So that's total. Next up, I'll go into total market cap 2. This is the basically everything except for Bitcoin, and where we are right now is we're at the 78.6. So that's that's an area of interest as well. So we have the 78.6 area of interest. You can see there was a lot of support. Finally, we made our way up, came back down. It looks like we fell below the support and then made our way back up to be within it. So this is, I mean, the fact that we didn't just get a straight up rejection straight from this level is pretty good, in my opinion, for the alt market cap, because this should, like, it's like this support, lots of support, right? Lots of support. We made our way up. Then we came back down. We fell down below the support, and I guess they probably stopped a lot of people out, went back up, right? This right here should have resulted in it just going basically straight down, or this right here should not have come up all the way to where it did. It should have, like, if it was really weak, it wouldn't have even made it up there. It would have stopped like somewhere like right around here. So yeah, that makes me bullish, for the next couple weeks, maybe next few weeks or so. Obviously we'll have to see what happens. But I mean, if you take the range from right here, this is the, big support area, resistance, support area, this whole range from top and then the bottom. We fell below it, and now we're back above it. Let me bring this down. This is the range right here. So now we're at the support of the range, and this right here is the mid range. So I'd probably target mid range right here. Why is this should be orange? There you go. Yeah, and so bottom, mid, top, and that's the weekly. Go down to the daily, see what's going on here. Looks pretty good. Okay, I want to go to the dominance levels now. So this is honestly, it's really annoying because it doesn't really work as much now, because basically so many people just have altcoins and just make alts that the dominance levels, they don't work as well. But this is a little concerning. I don't really like the fact that we're just hanging around in this resistance. You can see this has been a really, really big resistance for altcoin dominance. And basically this typically, honestly, I'm almost at the point of not even using this anymore, because the weight of this has basically how powerful this is of a measurement in analysis has decreased so much that it's almost not worth it. But I mean, looking at this isn't bullish. This is not good because it's in the resistance, right? And typically this is indicative of what the market actually is doing. So I would expect it to come down, but I mean, I expected this to come down here before, and it didn't. It stopped, which looks to be at the 50% percentile range. So maybe if I just do this and then 50%. Yeah, I mean, basically the 50% is where it stopped and then reversed. That's bullish because it's not like it came all the way down to 78.6 or something like that. But yeah, I don't know. This is not the most bullish thing. And then this Bitcoin dominance level is just the inverse of that. And typically when this goes up, the market tends to go down. But I might just stop using this. I'll keep on looking at it to see if the correlation continues. But if it doesn't, then I'll just go straight to the actual charts. And that's what we'll do right now. We will go into the Bitcoin chart right now. But before we get into the actual charts, I do want to give a shout out to Bybit. I am not sponsored by them. They're not like paying me to make this video or anything, but this is the new exchange that I'm using to trade on. And if you are looking for a new exchange to trade on, Bybit, I love it because it connects to 3Commas, which I also use, which I talked about in the beginning of this video. So if you want a good trading platform, I recommend Bybit. Obviously, I have money spread across multiple exchanges, but I need one for trading. So this is what I'm using. And if for some reason you can't use Bybit for geo-blocking purposes, there are things called VPNs, and I like NordVPN. And I'm really trying to create a relationship with Bybit. So if you have not, please go down in the description and click the Bybit referral link and sign up to Bybit using that link so that they know that you're coming from me, from my channel, from wherever you're seeing this. And that will really help the channel grow. It'll really help Crypto Elite. And also for the channel, if you haven't done yet, please give it a thumbs up. Please like this video and subscribe because it really means a lot. And I'm trying to grow as big as possible right now. Now let's go on to Bitcoin. Okay, so now let's go into Bitcoin. And what we're going to do is we're going to start off on the higher time frames and then go down into the lower time frames. So starting off on the monthly chart, you can see I have a whole bunch of stuff written out right here. And on the monthly chart, we have the previous cycle top to the bottom, which was 86%. Then we have, not the previous one, the first one. And then we have the last one, 83% drawdown. And now we have this one, and we're currently at 78%. So if the bottom of this cycle is going to bottom out around the same, amount that last couple cycles were, around 85%, we are pretty much, we're very close. We're very, very, very close. And if it was going to do that, it would come down to around anywhere between $12,000 and $10,000. So between 10 and 12, that's the sweet spot. That's the absolute, that's like last cycle. Last couple cycles were between 80 and 85%. Well, between $10,000 and $12,000 or $12,000 and $10,000, that's between 80 and 85%. So that would be the great time. That would be like, okay, time to go in the markets, in my opinion. Then we have the 88% drawdown, which is at 12.5. So 12.5, 12.6. So that's a little bit higher. And that's if you take it from the weekly time frame, the low of the weekly candle up to the high of the weekly candle, and then we look down to the 88%, and that's at 12,600. So even though 12 to 10 is 80 to 85% down, I prefer 12.6 because 12.6 is right above, it's front running, and honestly, I get front ran all the time. In my longer term, bigger buy orders. So I want to front run my front runs, and I would be so comfortable, so comfortable buying spot BTC and spot Ethereum and just spot crypto in general when Bitcoin reaches around 12,600 to really 13,000. I want to start buying in, and I am buying in. I'm buying every week, multiple cryptocurrencies. That's in the VIP. I explain it in detail in the VIP, which ones I'm buying, and in the Discord group, which ones I'm buying, what my strategy is, and all of that stuff. And I'll make a video for you guys about that soon. But let's go into this. Let's just look at this on the monthly chart again. So we have that number one, which is 80 to 85% down. We're 77% down right now. So for the big generational buys, anywhere but anything under 13.5 is fine in my book. Then actually anything under 14K, to be honest, it's a steal. I think Bitcoin's going to 100,000. I think Bitcoin's going to 200,000. I think Bitcoin's going way higher. So I would definitely be in around that time. All right. So the other thing that I want to point out was that whenever the bottom is formed, use this strategy to take 20% off the table once it reaches the numbers of. Okay, so I saw this a while ago, and I always have this in mind, which is basically saying that the number of days from the previous bottom to the halving is equal to the number of days from the halving to the next top. So once we get to the bottom, aka the previous bottom, to the halving. So once we get to the bottom and we establish that there is a bottom, whenever that happens, and that won't be recognizable until we're into the bull market already, then what I'm going to want to do is I'm going to look at where the bottom was formed, and I'm going to take that number and see how far from the bottom is it until the next Bitcoin halving. Then I'm going to say, that number is going to be the equal number all the way until the next top. So if from the bottom, let's say the bottom is December 20th, 2022. Okay. Well, we'll know that that's the bottom somewhere in January, February, March, April, somewhere around here. We'll know that this is the bottom because obviously it'll just be ranging and then move up and it won't go below that number, right? So we know when the next halving will be. So I'll take I'll take this number, I'll take the bottom, the number of days from the bottom to the next halving, and then I will just copy and paste that from the halving to out in the future, and that will be where I will take the profits from. That was long-winded. Didn't really need to mention any of that because it's not going to be happening for a very long time. But, it's information that's for the future, months and months and months down the road. This is what I'm going to use. Let's go back to the charts. Okay, so now that we have that, the other thing that I want to say is possible length of market cycle based on previous lengths, top to bottom. All right, so in December of 2022, that will be approximately... Let's see here. Where is this? Let me do this. Where is what I was looking for something. Oh, here. This right here. 399 days. There you go. So it's going to be 399 days from the very top, which was, in November, all the way to right here, which is the week of Monday, December 12th. So 400 days basically until December 12th. So what's the big deal about December 12th? Well, nothing really, except for the fact that the top to the bottom of the last cycle was 406 days. 406 days, right? And before that, 406 days. 406 days. So what will be 406 days from the previous top? Well, that will, I guess if I expand it out 1 week. So really this should be like, right. Between December 12th and December 19th. That's possibly where the bottom is going to be if the previous cycle bottom, number of days from the top to the bottom of the last couple cycles plays out. Okay, so that's a big day. December 12th. So I'm going to put an alert in. Okay, so we have a lot of big picture stuff. I'm going over a lot of big picture stuff. Sorry, my throat hurts, but I'm going over a lot of big picture stuff. I guess the other thing I want to say is that the 88%, like right around here, this whole area, 13,000 to 14,000. Down here, this is where miners become unprofitable. This is also 80% down from the highs and 88% retrace. So this is a really good area to get in. Not to mention there's a lot of, resistance all around this area. And so it's going to become support, should technically become support. So there's a lot of stuff going on. Right now, this is the range. It's 80% off the top, confluent with previous market cycles, and 88% retracement, confluent with institutional buys. It's also the 17-18 yearly close and open. If this hits the bottom of the range, then buy with 90% buying power. So let's go to the 12-month and just check this out on the 12-month. What was I talking about? So this is the yearly close of January 2017. This is the yearly open of January 2018, and this orange line, that's what it denotes. Okay, so that's what I'm saying. That's why it's probably, well, not probably, that's why it is a very, very important number. And that is 13,769. All right, so 14K, somewhere around there. Big picture stuff. Sorry for going on and on about it, but it's important. It's important. Have a game plan so that when the time comes, because if you don't have a game plan, then when the time comes, you're gonna be freaking out, because maybe there'll be a huge drop, a huge drop. Maybe the news will come out, regulations are coming, all this other stuff, big stuff. A bunch of things are securities, and everything just dumps super hard, right? Well, you're going to be so scared in that moment, that you're not going to want to buy. But if you planned it all out beforehand, maybe you put your buy orders in beforehand, and it happens to drop down there or wick down there, you're going to buy it regardless, and you'll stick with your game plan, and you'll be unemotional with it. And that's super important when you're investing. So we have all of that panned out right now. All right, so now we could go into the actual charts, check a couple things out. Let's go to the weekly, and let me just look at this real quick, and I'll be right back. Okay, so this is what I'm seeing right here. Basically, there is all of this back here, right? Just straight up. So this was straight up, and then we had some consolidation over here, and that became a really big support level, right? So this is really big support, $19K, $19,000, right? We ended up crashing down below that. So now it looks like we're in this range, right? We're in this range between basically the break of this structure right here. So the break above. And so the top of this structure right here is the top of the range, and the bottom of the range, and then this is the top of the range. So let me just do this real quick. Where's my little tool? It looks something like this, range, in my opinion, could be something like this. So now we're here, and bottom of the range is here, top of the range is here, and we're in the middle. We're at this is the 0.5. So that's on the weekly. Let's go down into a lower time frame. All right. And look at, what I'll do is I'll go back to the weekly, and on the weekly, just the last week and the week before, the range that we're in over the last couple weeks is basically the bottom's right here and the top's right there. So this is this. So the bottom of this, past few weeks is the middle of this huge range. Hope that makes sense. So we came down to the bottom. We came down to the 50%. Basically, we fell down below this support, and we entered this range, this huge range. All right. We stopped at the 50% of this range, bottom, mid, bottom 0.5, 100, right? So we stopped at the 50%. Now we either go, come down and we're going back up to the top, or we go down, come up, and then go back down, and we hit here, probably do something, and then we come back down, we hit the bottom, and we hit the bottom of the range, which coincides with this bullish market structure down there, which is this down candle before the move up, right? So let me get rid of all this. So I'm under the impression that because we hit the 50% of the big overall range and we moved up, Now what we do is we look at the lower time frames, and we see, is this bullish or bearish? And this is bullish because we have the swing failure pattern below the previous low. So what happened? We crashed down, and then we started to move up. A lot of people started stacking in their long positions here, 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 and then a lot of them started adding back in to their longs, or even going heavier into their long positions once we got a pullback. And so they started adding even more right here, 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 and here. And then we crashed down, and they probably had their stops right below this wick. So when we crashed down, this swing failure pattern stopped everyone out. It was a liquidity hunt, and then we shot back up. That to me is super bullish. Now we're on our way back. We came back down, and we came back down into, where is it? This right here. Let me boom into this. Actually, we didn't even hit it. Okay, so we didn't really hit this order block, but we came back down into what I would assume would be the 68%. So 61.2%, there, 61.8% right there. Golden ratio, hit the golden ratio, and then we pop back up. This to me looks bullish. So let me get rid of all this shit. There you go. Yeah, so all of this looks bullish on the short time frame. Plus the total market cap and the other stuff that we went over earlier is bullish. So I want to be looking for longs, and I want to potentially be looking to longs all the way up to here, all the way up to 18,400. 18,700 even. This is potentially where we're going. Obviously, what I'm doing now is I'm playing level to level, because there's two things that you could do. You could swing trade, or you could trade level to level. I was a swing trader. I'm a very big swing trader. I'm really good at swing trading, and swing trading is awesome when you have these type of trends. So I meant to say I'm a trend trader. So I trade the trends, and that's usually what you're taught in books and YouTube videos and courses and stuff like that, is to trade the trend. And it works really, really well. I could trade this entire trend and capture almost the entire move. And then I could also sell here, buy back here, sell here, and then trade this trend down, buy back here, trade this trend up, buy back here, trade this trend down, buy back here. However, this right here, like this coming up, now we're in a bull trend, but it crashes back down, and that, that this trend goes from bearish to bullish, back to bearish, like very, very, very quickly. And that is where you get in trouble trading the trend, because you might buy here, buy here, buy here, adding to your position, trading the trend, and then buy on a pullback because the trend is bullish at this point, breaking the market structure up, so you buy back on the pullback, but then it keeps on dumping. And that's where you get screwed, because your positions are usually pretty heavy if you're trading the trend. However, if you're playing the range, then what you would simply do is you would map out the range high, you would map out the range low, and you would say, okay, I am playing the range, so you would buy at the bottom of the range, so you would buy right there, and you would have your stop, underneath here. And once we broke out, you would sell right here, try to buy back, but you would have stops. So trading ranges, I think trading ranges, it provides you much better risk tolerance, risk management than trading the range. Obviously, if you, than trend trading. If you trade the trend, obviously you still have risk management in place, 100%. But risk management, it's just, to me, it's easier if you play the range. So I'm playing the range now because honestly, I feel like we're going to, even if we do pump up to $18,000, $19,000. I think that we're going to eventually fall back. So maybe we'll get into a bullish trend, upward trend, but I think we're going to fall back down, and then I think we're going to range basically for the next year. I don't expect us to have a bull market anytime soon, a true bull market or a true bear market continuation. Like we had the bear market. Like the bear market was this. This was the bear market, okay? This is the bear market. This down here, this whole area down here, to me is just going to be like straight up like stuff, something like this, you know, before finally we get the rocket ship to the moon. And then we end up going all the way, you know, 80K, 90K, 100K and beyond, right? So I think playing the range down here and trying to collect as much Bitcoin as possible, trying to collect as much fiat as possible within this range is going to be more beneficial than saying, oh shit, we've bottomed out, we're going to the moon, so let's all get in and just stack and hold. I don't think that that's the case. It's almost like this. We had this giant bear market, right? And then you could say, okay, I'm going to buy right here and hold to the moon. And we had this trend that went up. So you're thinking you're doing really, really good, but it came all the way back down. It retraced all the way back down. So you lost all of it, right? Or the majority of it. However, if instead of doing that, what you did was you said, okay, we hit this low right here. I'm just going to trade the ranges. So you trade here, you buy here, you sell here. Comes back up, comes back down, you buy here, you sell here. It comes back down, you buy here, you sell here. Then usually, at least for me, what happened is right around October of 2020, I could 100% tell that bull market was about to start. I could 100% tell, okay, it's go time. You know, I want to be in heavy and I just want to hold. So if you have a good enough read on the market, which isn't really that hard if you can read sentiment and things like that, you could just get in, and then this right here, this area right here is where you really want to go all in. You know, I'm holding, I'm gonna wait. I believe that a trend is starting. I believe that a true bull market is starting. And so let's do that instead of just trading the range. And so I'll switch to trading the trend right around this area, and I'll just start buying and holding to trade the trend, as opposed to trading, you know, buying, selling, shorting, buying, selling, buying, selling, and then buying again, and then I'll just wait. I hope that makes sense. And so that's what I'm doing. Of course, I do have my separate accounts. So I do have an account that is more like a swing trading, trend trading account, and I'm definitely keeping a lot of money in there. But as far as like my actual trading goes, I want to do more range trading as opposed to trend trading. And so that's what these videos are going to be teaching you and then going over. Holy moly, that was so much. So yeah, let me go into the lower term time frames and see what the game plan is. And let's go over that now. All right, so going down into the 12-hour time frame and actually doing some charting now. So what do we have? This is what we have. We have the range low, we have the range high, and we're at the mid range right now. It was acting as support. We came into the supply zone and then got rejected from it and came back down into the 61.8 right there. Perfect tag of the 61.8 before jumping back up, and it actually jumped all the way up to the 23.6, which is really good. So that's bullish in my opinion. And so I would say that maybe we go down to a lower, definitely go down to a lower time frame. Things are looking pretty solid. So just looking at it, I think the best trade setup for Bitcoin. So I look at the 4-hour, right? And I think that if this is going to be an actual push up, then I don't think it will come down below maybe, you know, like 16,400. I don't think it's going to come all the way back down here. It's possible that you could do something like this, but I think that this low was probably low. It might come back down there just because we have some room for it to come down based on the RSIs. The stochastic and the regular RSI. Going to the 1 hour, sort of the same thing. We have some slight bearishness in the 1 hour. Actually, this isn't really that bearish. It's just normal. So yeah, I think that these are the lows. I think we might come back down to the lows just to reset, you know, help reset it a little bit, and then eventually pump back up. And we already basically got into the supply zone down back here. So I think once we come back up here, yeah, we will get a little, something like we will get a rejection, but I think ultimately we'll hit the top of the range because now the new like real big supply zone is right up here. Like this is where a lot of people, I'm sure shorted. They saw this, so they shorted here, they shorted here, they shorted maybe here. They shorted any of these tops, right? All of these tops, people potentially shorted. People are probably shorting right now, to be honest. I mean, with this trend line, I'm sure people are shorting. And this is definitely a reason why I think we'll pop back down, which we did, but we already did. We popped back down and then we quickly basically got back up. So, but there's still a lot of people that are still shorting, I'm sure. So I think we'll come back down before moving back up because, and then I think we will short squeeze everyone who's shorting now, everyone who's shorted here, everyone who's shorted here. Basically all of these shorts I think are going to get run, and it's probably going to get run pretty hard, and we're going to come all the way back up. So I would definitely take my profit at 17,000, 17.2 though, because this is like pretty much the optimal area to short. So like 17.2, I'd probably start taking some profits on my shorter term trades. Okay, so now I want to get into Ethereum, and I want to do some long-term, higher time frame stuff, and then the short-term trades. Okay, so for Ethereum, higher time frame stuff, we are in this big range right down here between basically $900 and 2,000, 1,000 and 2,000. That's the big range, but it's really 900 and 1,900. So that is the range on the higher time frame on the monthly chart. So we did come down into the $1,000 range, right about 1,000, 1,100, like the lower end, and we wicked back up from there so far in November. Last cycle we went down 94%. Right now Ethereum is not down that much. It's not down 94%. It's down a lot, but if you check, here we go, top to the bottom, it went down 81 to 82%. Right now it's down 75%. So it's down drastically, definitely down drastically, but it's not down 94%. If it were to drop down 90%, that would be 486, $500, somewhere around there. This right here is the monthly bullish order block. So this is the down move before the up move up that broke the market structure, aka the market structure of the previous cycle, the top of the previous cycle. So this right here is where I would definitely just want to go all into ETH at 530, and honestly I'd probably do it at like 555 so I don't get front ran. So I'm just gonna put that like that. Yeah, so I would definitely be all in ETH here. This would be an absolutely insanely good price, and so that's what I would do for that. Then we have, what else do we have? I don't know. I would say I still think anything under $1,000 is great to just dollar cost average, spot buy, just dollar. Honestly, I have this green box, but this entire box is fine. I would definitely want to sell it, starting to sell some at $1,650 all the way up to $1,900, $2,000 if we do get back up there. And so that's the monthly chart. On the weekly chart, we have, actually, let me go down here. On the weekly chart, we had this right here. So we are inside of the bullish order block on the weekly chart. We tapped it right there. We tapped it right here, and we tapped it right here, and popped back up, and now we're back down below, and we're back within it. So that's not really that bullish, but on the weekly chart, the RSI and the stochastic RSI are oversold, so that's pretty good. The MACD, it's going down. That's not very good. I don't really like the weekly chart, to be honest. It's just like down, up, down, up, down with lower highs and lower lows. I do like how it is coming back into the previous lows down here. So let's go down to the daily time frame. All right, we made this. I could get rid of this. So yeah, high time frame bullish order block is right there. So what was I looking at? Not entirely sure. What was this, the weekly? No. Was this the 12 hour? Was the daily 12 hour? 12 hour. So this is the 12 hour. I don't know why I put high time frame. Should just put 12 hour. But whatever. This was the bullish order block right here. From way back there, and we tapped it, shot up, tapped it again, shot up. I don't normally like that. However, I do like this structure where we get the tap and then it looks right, down, up, right? That usually ends up going like that, right? So I'm still bullish. And if I wanted to trade this, it would be pretty hard, to be honest, to find a good place because we have this range right here. Basically, bottom of the range, lows right there, top of the range. Let's just say that this is the top of the range. And we're in the 50%. We're above the 50%. So, yeah, lower time frame, it doesn't look good because there's all this resistance, right? But you could go down. You could go down and say, all right, I want to do something like this. Stop goes here. Because if this is truly bullish, we're not going to go back down below here, in my opinion. And, wow, actually, that's pretty good. This is actually a really good trade. 3.16R, only a 2.6. Maybe we could tighten that up. Basically 2.6 stop loss. 0.5 of the range right underneath of it. I sort of like this. Top of the range right here. This is actually a much better trade setup than the Bitcoin one was. Remember, Bitcoin was, where'd it go? 2.76R. This one is 3.616R. So I would rather take this one for sure. Like any day, all day, every day. So yeah, that's probably what I'm going to do. Okay, so now I want to go into Ethereum against Bitcoin. So ETH against BTC. Ethereum usually outperforms Bitcoin. It's been outperforming Bitcoin for a really long time. Some high time frame stuff right here. This was, top, bottom. Let me go to the weekly for this one, actually. So you can see top, and then bottom, fell below it. Now we're ranging like right here between the bottom. So top, bottom, came up, hit the bottom again, came up, overshot the top, eventually made its way back down to the bottom, overshot the bottom, eventually made its way back up, got to the top, and then it started coming back down, hit the 50%, and then came back up 50%, came back up a little bit. So this is really looking tricky on the higher time frame on the weekly chart right here. All that we know is that we have the bottom is down here, the top is up here, and we're just above the midline. So, I like it how we came back down, tagged it, came back up, came back down, and then we tagged it, and now we're on our way back up again. So being with my bullish bias, my bullish bias does say that we move at least back up before we move back down. So let's just go down into the lower time frames, see what's going on. Check out the market structure of Ethereum against Bitcoin. We have the basically market structure break happened right there. Market structure break came back down. Did not even come back down to, well, I guess we came back down to here, which is the, what do you call it? The order block right here. Came back down before moving back up, and now we're basically coming back above it. So yeah, we are in an uptrend on the 12-hour on Ethereum against Bitcoin, which also makes me like the Ethereum trade even more with the USDT trade or USD trade. So I'm going to treat this as if we're in an uptrend and we're going to continue moving up, and I'll probably want to take my profits right around here because this is obviously the previous highs. Other than that, the last one I want to go through is Link, because I really like Link. Basically, lots of support down here, came back down, tagged it, and then, now we're all on our way up. I still think Link is good to go for December because they're coming out with staking in December, so I bet a lot of people will be buying it up this month or in a few days. For now, Link against BTC doing phenomenally well. If I restart this chart, it's been basically up only mode. This worked out really, really well. Just right here, basically the lowest price to get into. It did stumble around there, but yeah, hit the institutional 88% and then started basically jumped up from there. So Link against Bitcoin has been phenomenal, up freaking almost 100%. Actually more than 100% from the bottom, definitely over 100%, 120% up to 125% from the bottom. From here, from my area, it's up pretty much 95%. So that's pretty good. That's really solid for the longer term for Link. And I think if we look at the weekly time frame, I like how it came back above this area right here. Lots of support. Finally broke through it, came back below it, broke through it, came back below it, broke through it. So now I think it really established itself that it wants to come through it. So the best long-term thing for Link would be right around here before hopefully it continues to move up and we get it to come all the way back up to this big resistance right up in here. And that would be the ultimate Link against Bitcoin trade right there. So let me just put this something like this. Okay, I don't know why. I hate how TradingView does this. So annoying. But something like that, right? All right, cool. It's pretty solid. And that's if, of course, we continue to have like a nice bullish momentum for Link against Bitcoin. Link against USDT. Honestly, Link against USDT, huge consolidation right here. I think that this is more like accumulation, so I do like it. I would have loved to have it come down to this area for the the demand zone, where a lot of sell side liquidity would be, but it seems to not have done that. So I don't think that it's going to come down and hit here. I just don't think it's going to do that. So if it comes back down, let's see, go down to the daily chart. Not seeing much opportunity right here for the daily chart. Yeah, okay, so for the daily chart, I like this. I would probably do something like this since I'm leaning bullish. And this is potential 18% and all the way up to actually here. I would probably put this trade on. I would do this trade because of the staking mechanism, staking fundamental play behind Link. That's the reason that I really like it. So I think Link and Ethereum are probably better plays than BTC. Like these two trades are probably better than the BTC trade. So I really like that. And lastly, the last one that I'm in, I'm already in Matic. This is just an overview. I'm already in Matic and I'm already in LTC. So these are two trades that I am in right now, but I'll probably try to get into Link and Ethereum. And that's going to be it for this market update. Hopefully it was helpful. I'm going to try to make a lot more, going to do a lot more updates. The last thing I want to say is that I loaded an account up with $30,000, a trading account, and I'm just going to trade on there and I'm going to compare that to Bitcoin, to just holding Bitcoin and see which one outperforms. It's just holding Bitcoin from 20,000. I wrote it down, $20,712. That is when I deposited my money into the account. I deposited 24,000, and then I just deposited another 6,000 into the account. So it's $30,000 total. Price of Bitcoin when I made my first deposit was 20,700. So my account is up right now. It's up a few percent. I think it's up like 10%. So we're going to see what outperforms, my trading or holding Bitcoin. Okay. And let me know if you think I should also do it, my trading versus holding Ethereum as well. I'll just say, you know, Ethereum was what Ethereum was at the time as well, and I'll do a comparison. So ETH at the time was $1,579.98, so $1,580 when I put it in. So we're gonna see, will my trading account outperform holding Bitcoin and or outperform holding Ethereum from November 8th, 2022, because that's when I put my money in. And we're gonna do that. I'm gonna test it out. I'll be transparent and open with it. And yeah, that'll be the basis for basically for my hedge fund. That'll be the basis. It's like, look, you could put your money into Ethereum, you could put your money into Bitcoin, or you could put it into me, and I will out trade it. I will out trade the market. I will out trade just holding, buying and holding. And yeah, that's gonna be my thesis. So very excited about that. I'll keep y'all in the loop. And yeah, talk to y'all later. Thanks again. Please like and subscribe if you haven't already. And check out the links in the description. Get those stuff. Get those things. Black Friday, Cyber Monday. It's really good deals. See y'all later. Keep on stacking those sats. Keep on making those gains. Bye.